So today we're going to focus on 4 big stock news that has come out recently. There's a lot going on out there in the markets. There's quite a few bits to choose from, but I thought I'll talk about these 4 bits of news that has happened in the last few days. They are stocks I own, so I hope you enjoy it. Let's get started. And while you're here, I just want to let you know I dropped an exclusive video on Patreon, which was the stock request, and this is where members of the Discord vote for me to look into a stock. The stock that won was Coupang, so I gave my thoughts on Coupang on this exclusive video on Patreon. If you do want to support the channel and get 2 exclusive videos a week, you can join the Patreon through the link in the description. It's only £5 a month and you get them exclusive videos. You get a Discord with 500 members on to talk about stocks, including me, and you support the channel as well. And for the price of £5, price of a pint, it's not too bad at all. It's probably why it's the highest subscriber to Patreon members out there on the stock market YouTube. And if you want to get some free stocks, join Trading 212 with the link in the description. You can get a free share worth up to £100. But first of all, not big news stock related. I just wanted to point this out. This was shared by Luke on the Discord, and it was really interesting, and I thought I'd share you guys, so I'm not going to take credit for it. Thanks to Luke for sharing it on the Discord, but he was pointing out the S&P and the difference and the gap between the Russell 2000. And it was to talk about the last time the S&P and the Russell 2000 were having a 20% drawdown. And the last 3 previous times that this happened, the outcome was that the S&P gained 14.3% in the next year, and the Russell 36%. The next one was 1991, where the S&P gained 12%, and over the next year it was Russell gained 35%, outperformance by the Russell. And January 21st in 1985, and it was a S&P gain of 70%, and the Russell gained 18.2%. So you can see here, when normally this happens, it's normally a pretty good sign, but we'll see what happens. Something can always happen different in the markets going forward. Flutter. So the first stock is Flutter. So this is stock I own. If you watched the last portfolio update, I was a bit oohing and ahhing about Flutter, and you know what? I should have bought some more. This was a mistake on my side, but hey, at least I do own some shares in it anyway. It's woken up. It's been on a big rally. The stock is up nearly 20% since it brought out a trading update. And the key thing as well is that Flutter has been up. You know what else has been up? This guy, DraftKings. DraftKings has been a bit of a cooling period at the moment, which I don't mind, but it did have a bit of rally up because of Flutter. Now, Flutter brought out their Q4 trading update. So a lot of people that are DraftKings shareholders looked at Flutter for some information on how the Q4 was going. And I'll tell you, it's going very well on Flutter. As you can see, the stock is up because of it. Total revenue was up 15%. Now, obviously, Flutter has the more mature parts of the UK, for example. So that's what makes the growth look a little bit slower. But saying that, 15% is still very good growth. The highest growth they've had for a long time because of the US growth. They always put the US as the standout grower because that's what everyone's kind of interested in. So they always put that first. And you can see AMPs were up 33%. Sportsbook stakes was up 53%. And game revenue was up 49%. FanDuel remained the number 1 sportsbook. Well, it's in between a little bit with DraftKings at the moment, but we'll let it go, with 43%. Q4 gross revenue market share 51%. So the key thing that this first led me to look at Flutter and DraftKings, and the big worry I have with them both was the launch of ESPN. I was worried that they were going to take a little bit of a market share. The suggestion from Flutter at the moment is that is not a problem. So that was really good to see. This was the quarter that I was worried about, and the fact that that seemed to cause no impact at the moment is very good. Q4 revenue growth of 26%. But they said that there was some offset by sportsbook net revenue margin decline. So that's where there was customer friendly results, which they said down here. You can see there was an impact of the customer friendly results. We've seen this was rumoured a few weeks ago. So that's to be understood. We've looked at the outcomes for the last year. The outcomes have been relatively positive for FanDuel rather than the customer. It's going to go the other way at some point, and that's what happened. So yeah, absolutely fine with that. And you see the market wasn't bothered about it. Even though it had a bit of an impact on the revenue, a little bit of an impact on the EBITDA, the market went, yep, that levels out over a long period of time. And they rewarded, obviously, the share price with it. An increase of 50 basis points in promotional spend, so not too bad on the promotional spend as well from an ESPN point of view. UK revenue was also very strong. Australia wasn't declining as fast as well. And you can see here they're also going to have their dual listing on their NYSE on the 29th of January. Overall, very good update from Flutter, and that also led into DraftKings as people looked at the Flutter earnings and went, they're good. That means DraftKings should have a Q4. So we'll see if they deliver when it comes around to it. Another stock that I own that had a very good trading update. Alphawave up 14%. Now, I've got to say, the stock actually did rally up a lot more. It was actually up nearly 30%. But since around about 11:30 on Monday, the stock has started to pull back, and it's pulled back around about 8%. Now, I'm not going to lie, after looking at the pullback on this stock and then looking at this trading update, there's part of me thinking this is high up on my buy list for next week, so we'll see what happens there. But Alphawave came up with their Q4 trading update, and wow, I've got to say, this was, in my opinion, the best update I've seen them do since I've been invested in the company, which is what you want to see. Record quarterly license and NRE bookings up 245%. They said that they have, a lot of it was talking about extension into clients. You can see here that there was another client that won in Europe, 7 new design wins with, once again, Europe and North America. Partnership with ARM as well. Very good, what we want to see going on there. Management remains confident in the outlook of the business. License and NRE up 245%. Royalties and silicon orders was down 87%. We knew that was going to happen though, so that's why the market wasn't really bothered about it. You can see here from Tony Palace, the CEO, said that in Q1 2024, pipeline remains strong with continued high demand from customers for our high-end IP products, which is what you want to see. We are excited about the long-term growth potential of our business. John Lofton Holt also said that the momentum is driven by the leading hyperscale and AI companies in North America. This is what I was hoping for. I was hoping to see the Alphawave start taking a slice of the pie of the hot semi-space, but at a relatively cheap valuation, which is starting to happen, which is good. They said that as anticipated, royalties and silicon orders were down significantly over Q4 2022 as we actively deprioritize the legacy lower margin silicon business from Chinese customers. Great stuff. Silicon orders in the quarter were from Europe and North America customers. We expect further silicon orders from Chinese customers in 2024, albeit at a lower level in 2023. So that's good. Higher margin business, and you're going more to America and European customers rather than Chinese customers. We like that. We like that exposure risk that's going on there. The outlook for 2023 remains unchanged. Alphawave Semi expects revenue of 340 million to 360 million and adjusted EBITDA of approximately 87 million, or approximately 25% of revenue, which would be very good numbers to see from them. So the market liked it. I liked it. I'm thinking of buying more, so we'll see what happens there. S4 Capital. Now, the funny thing that always makes me laugh about this is that obviously I own Flutter. Very good results. The stock is up. I own Alphawave. Very good results. The stock's up. S4 Capital, not so good on the share price result, and we'll talk about the results. But you'll see here that the stock actually opened up positive on the day. I thought on the trading update they brought out, I thought it deserved to be up. The stock then had a major swing and went down, and actually today it's actually putting a bit of a recovery in. So crazy share price volatility from S4 Capital. But of all the stocks that I own, honestly, the ones that I get asked about the most are the ones that I'm down on. And even on the down days, I get asked a million questions. I get nothing asked about Flutter, nothing asked about Alphawave. I get asked a million questions on S4 Capital, and it's like, really? Do we have to talk about this one again? And it just makes me laugh, you know. It's a prime example of like the fear, you know. Everyone's happy when stocks are going up, but the fear of a stock going down. Oh, panic stations, and that's what it was with S4 Capital. And in fact, I actually got asked no questions about S4 Capital when the stock was up on the trading update. As soon as the stock went down, that's when I got asked the questions, which just shows you fear drives a lot of the sentiment. And I've got to say, you know what, we'll talk about the share price in a second. Let's just look at the update, because it was quite a small update, really. They said the company anticipates like net revenue decline of around 4%, which we expected. It was actually a little bit higher than what was expected. I think it was 5%. What we expected. So that was actually a little bit of an improvement. And operational EBITDA margin of the range of 10 to 11%. They also said that net debt is expected to be towards the lower end of the guidance of 180 to 220 million, which is good. Managing the cost reduction a lot more and managing the debt. Now, obviously, this was a little bit higher than what was expected. So you'd think, okay, it's not going to get any worse on the share price point of view. And you probably, with the run that it's been on, you might see a bit of a bottom here people are thinking, okay, they're not putting out a profit warning. We've had 2 profit warnings recently. We're not getting a third profit warning. Is this the bottom of the stock? And maybe a few people go, you know what, this could be the bottom. It's not a profit warning this time. Maybe the share price, you know, goes up. And it didn't happen. The stock did go up, and then the stock actually then started going downwards, as we see here. And I've got to say, it was crazy because the share price shouldn't have gone down on these results. It should have been a bottom for the stock, and the stock should have gone up a little bit. I don't know if that's just because, unfortunately, it's in the dive at the moment, and it's a bit of a dog of the market, and nobody is interested in it. So maybe there needs to be a bit more of a reputation built up, and we need to see more of 2 or 3 improved trading updates before we start seeing that reflect on the share price. Because hey, it's all well and good as saying it's an okay update, but let's be honest, the revenue still isn't in the right direction that we want it to be. Which, once again, I have to say this a few times, we've got to understand it isn't going to be amazing, because we've seen the environment that the marketing industry is in. When you look at the likes of other players in the space, they've been absolutely killed on the share price and on a financial basis. So we can understand that S4 Capital is having kind of the same issue at the moment. So we understand it, but for the share price to start reflecting that, we have to start seeing the financials show consistent improvements, and as well as that, we've got to see profitability improvements and revenue improvements, and then we can actually look at the share price and go, okay, now you should be going up more and more. So yeah, the share price shouldn't have gone down, it should have gone up, but realistically we can't say too much because there's a bit of reputation that needs to build up over the next few months. But it was a step in the right direction at least. And that leaves it on to the fourth one, which is Celsius. So Celsius didn't really have much of a move off this information. In fact, it's actually down a little bit. I think that that was on Thursday, though. I don't know if it was an analyst downgrade. But because of the news that came out, there wasn't much movement in the share price. But I think Celsius is just having a bit of a cooling off phase. I think it's having a bit of a flatlining phase, as you can see here, which is good, because I think the valuation needs to catch up to the financials a little bit, which I think is actually starting to happen a little bit. I think if you do look at Celsius on a forward P now, it's actually down at 46. So that would actually be really attractive for a company that is forecast to grow, nearly 100% this year, and the EPS is going to go from 0.88 up to 0.74. And actually, if you look next year as well, the EPS is forecast to go up 0.90. I think it'll go up more than that, and up 40% nearly sales growth next year. So the financials are definitely catching up to the valuation now, which is good. So this is all really healthy, really, for the longer term, and that's why I'm actually buying back in, because I don't think the valuation is as bad now. But Celsius, one I own, once again, a stock that is, I made a really good amount of money on this. Obviously, once again, green fingers, no one mentions that one, but we'll ignore it. But buying back in, because I think the valuation, like I said, is not too bad to the growth that you do look at now. But the main thing that I was trying to say, the big news with this one, is they are now expanding at last. It was something that I wanted them to do around about 12 months ago, but they are getting to it now, so we'll let them off. I think they were focusing a lot more on the US, and clearly, as you look at the financials that I just showed you, that has been very successful for them. The growth has been very good. But obviously, if they want to keep the valuation up, if they want to keep the growth up at the rate they have done, there has to be a point where they expand out the US, and it's going to start happening. So they have started expanding into Canada. They're going to expand to Canada using the existing Pepsi deal that they currently have, and they're also going to move in the UK. They're going to move into the UK through Suntory Beverages and Food as well into Great Britain and Ireland. So yeah, we should start seeing Celsius probably popping up on the shelves in the next couple of months. I'm going to keep an eye out and see if I do spot it anywhere, but this is good. I think the two markets that you would say out of the US that you would expand to is Canada and the UK. I think those are the two best markets for them to go to first, and obviously looking how well that adapts in these two countries will be the kind of the marker of, can they move from just being a US energy drink company into a worldwide company. So yeah, a big step in the right direction for them, and time to see if they can expand massively. I guess they do already have a good presence actually in Europe. So they have had some success already actually in Europe, but these are definitely two big markets for them to go to. So yeah, a lot of news stories out there, and that's not even mentioning a lot what's going on in the travel industry at the moment. As there's a lot going on there. Obviously China, there's a lot going on in China at the moment. So yeah, there's a lot of news stories going on around the world at the moment, but I thought I'd talk about these 4 big stock updates of stocks that I own anyway. So I hope you enjoyed the mini update, guys, and see you in a bit.